All right, we're back on our WIP process and reporting part 2. What is involved in creating the WIP? So last week we talked about who needs a WIP report, why is it so important, and who else is relying on that? Who's requesting that of you? So if you missed that video, go back and watch that for part 1. We dive into a little bit more of why the WIP is so important, who needs it. So now if you are finding yourself that you are a contractor who needs a WIP and you've had bonding or banks request that WIP of you, now we're going to go into what all is included, what items, what pieces, what numbers make up that WIP report. So the first kind of column that you typically see is the job number, if you use job numbers, and the job name. If you don't want to specify the job name or give that out or give a customer name out to a third party, you can always hide that cell and just use a job number. So sometimes that's helpful by having those job numbers in there. So the second thing that you're going to have in there is the contract price. And in addition to that contract price, you're going to have any adjustments for approved change orders. We only want to include change orders that have been approved and authorized to be billed for. And then you're going to have estimated cost for the entire project. So these are also going to be updated, as this is probably the one number that's going to change most frequently, and which also causes a lot of fluctuations in financial statements when people aren't sure how to report this number. So this is your estimated cost for the project to complete the project. And when this number changes, it's going to be due to, okay, we are running a little over on labor. We had to order some extra material that we didn't originally plan for, that wasn't in our original estimate. We have this additional cost that we incur that we didn't plan on incurring originally. So that's when that number can change. It can change for the better or worse. So it may be like, oh, we're doing really good on our project. We're not going to use as much labor costs as we intended. So let's lower that number. We got a really good deal on our buyout of material. I was able to buy in bulk. We saved money. So let's lower this number. That's when those numbers can change. We also want to make sure that we are accounting for the costs that are associated with the change orders that have been approved. So if you're adding a change order to the contract amount, we also want to add those costs into the estimated cost to complete the project. So based on those two figures, we're going to be able to calculate an estimated gross profit and an estimated gross profit margin for each project. So those are going to be automatic formulas. You're not going to fill anything in there. Then we're going to have bill to date amounts. And each month we're going to enter the billings for each project and have that total flow through to a bill to date number. We're also going to have the same for cost to date. So all the costs going in that's hitting the project are going to be assigned there. So you're going to be able to tie both of those numbers out. The bill to date, you should be able to tie to the revenue before any adjustments for under over billings on the income statement. You should be able to see that number there. As well as the cost to date, you should be able to see that number on the income statement under those direct cost of sales. So those direct job costs that are showing up in the income statement, those should total your cost to date numbers on your WIP. So based on the cost to date numbers, that will automatically calculate a percentage of completion for you. So it's going to take the estimated the total cost to date divided by the estimated cost. And that's going to give you a percentage of completion based on your cost. That does not mean if you walk out of the job site and you're like, oh, today April 15th, April 14th, the job is 80% complete and we're working on a WIP from March, that doesn't mean that the costs are going to be 80% complete. So understanding the difference between those things, the percent complete based on cost incurred in your financials in relation to the total cost to complete the job, and when you walk on the project, what you see as percent complete. So we would love to see those things line up and be pretty close to each other. But sometimes people get thrown off on the WIP report because they're thinking at that point in time that they're looking at it, that's the percent complete when they walk on the project. So I just want to make sure that that's a clear understanding there. Based on that number, your percent complete number, you're going to be able to calculate contract revenue earned. So you're going to take the percent complete and multiply that by the contract value to get this contract revenue earned amount. And then, so again, that's going to be another formula. Nothing you need to enter, nothing you need to change. Over billings and under billings are going to be determined based on this number. So based on this contract revenue earned, you're going to compare that, and the difference between that and the bill to date is going to be whether you have an underbilling or an overbilling. So if your billings are more than your contract revenue earned amount, you will have an overbilling show up. If it is less than your total billings today are less than that contract revenue earned amount, you're going to have an underbilling. We would rather see an overbilling than an underbilling because then we are delaying on cash and a bunch of other things. But you also don't want your overbillings to be so out of whack either. So really understanding how those items impact your financials and what they mean. We'll dive into that more on part 3 of WIP reporting. So again, the contract revenue earned is going to help determine what the over under billings should be. And again, that's another formula. Nothing you need to plug in, nothing you need to worry about. From there, you're going to have your contract revenue earned, subtract out your cost to date, and that's going to give you gross profit recognized. So there's only 5 areas that something needs to be entered, and only 3 areas where anything really needs to be, maybe 4, that anything really needs to be adjusted. So you're entering the job number and name, you're entering the contract price and any change orders, you're entering an estimated contract cost, we're entering bill to date and cost to date. So typically what we would do in this process is we would put all of this information together, and then we would send it out to the project manager for that job and have them review it, or the owner, depending on the roles in the company. And the only thing that they really need to change is if there are any change orders that we're unaware of that didn't get put into the system that are approved, and any costs, estimated costs that they're planning on changing. Like I said earlier, those examples of, they're going over on labor or they're going under on labor. They're not going to use as much labor. Maybe they got a deal on materials. Maybe they need to adjust it for a change order. So those type of things, we want to make sure that they are looking at and changing. They don't change the percent complete of the project. They don't change the contract revenue earned. They don't change under or over billings. They don't change cost to date. They don't change billings to date. Now they can review those and maybe they can see, okay, well, some other project's costs got tied into mine. I know my cost shouldn't be that high, or we're missing some costs here. They might be able to see those things. But that number should not be changed manually. That's going to be something that's going to go back into the accounting system and we would need to be researched and looked at. So once they change that, if there's any estimated costs that need to be changed or any change orders that need to be added, then the WIP is pretty much done, and it would flow through journal entries to the financial statements. And again, like I said, we will go over the impact of the financial statements, what these numbers mean, and how they change your financial reports in part 3. So your daily in LA for today. If you feel like you could really use some additional guidance on creating your WIP, or you have some questions or would like anything reviewed, please feel free to reach out to us. Our number is 816-207-2759. Make sure to leave a message, please, with your name, your business, what you're calling for, and we will get back to you and try to help you with this. And stay tuned for part 3. So thank you so much.